Everyone tells you should start investing, but before you decide where to put your money, you need to understand what your options actually are. Welcome to Investing 101, when we break down everything you need to know about investing in Ireland in plain English, no finance bro jargon. So what are the main ways people invest their money? First up, we have stock. When you buy a stock, you buy a tiny piece of a company. Think Apple, Amazon, Google, Tesla. If the company grows in value, your investment grows with it. Stock can deliver really strong return over time, but the value can go up and down significantly in the short term, which is why most beginners are advised not to put all their money into an individual stock. Next up, we have ETFs. ETFs are a basket of stock bundled up together. The Vanguard S&P 500, for example, holds shares in the largest 500 companies in America, all in one single investment. These are my favorites because ETFs spread your risk automatically, and they are the most popular starting point for beginners. Full episode coming on ETFs, because in Ireland the tax treatment for ETFs is very specific and you need to understand it. Next up, we have bonds. When you buy a bond, you're essentially lending money to a government or a company, and they pay you back with interest over a specific time period. These are lower risk than stock, but also low return. They're often used to balance out a portfolio and to reduce overall risk. Next up is property, and I mean buying a property to rent it out or to sell it later at a higher price. In Ireland, this is one of the most familiar forms of investment. But property requires a significant capital upfront, and it comes with ongoing costs and responsibilities. Next, we have commodities, things like gold, silver, or oil. Gold in particular is one of the most widely held investments in the world, and it's often used as a hedge against inflation and market instability. You can invest in commodities directly or through an ETF that tracks these commodities, like gold. Next, your pension. If you're contributing to your pension in Ireland, you are already investing in the stock market. The key here is understanding what you're actually invested in and the risk you're taking. Most people have never checked, and it's worth doing it. And finally, crypto. Cryptocurrency is a digital currency that exists entirely online. There is no physical coin or note. It runs on technology called blockchain, which records every transaction securely without a bank or a government controlling it. Bitcoin was the first and still the most well-known. Cryptocurrency is highly volatile, high risk, and highly speculative, meaning that the value is driven largely by sentiment and demand rather than underlying business performances. All these investments work differently. They have different level of risk, different potential returns, and different tax rules. And that's why understanding what you're buying is just as important as investing itself. Which of these have you already invested in? Let me know in the comments and follow along so you don't miss the next episode.